Hi, what is going on? Everything is going down. Bitcoin is selling off. Ethereum is selling off. Altcoins are selling off. Who's actually selling? What is losing the most? And when can this potentially stop? So what's interesting around this recent sell-off is that Bitcoin is actually losing the most. So Bitcoin is going down 3.9%. Ethereum is going down less with 3.7%. And if you look at the total cryptocurrency market cap minus Bitcoin and minus Ethereum, it's only going down by 2.2%. So the asset that's supposed to be risk off loses the most during bearish times, which is kind of odd. But it also makes somewhat sense. Because what I think is happening is people are selling off crypto because of the stock market falling down. So especially the tech stocks, they are losing because of fears for potentially monetary tightening, right? Maybe the Fed at some point will do something to fight that very high inflation. And so the tech stocks, they lose most because of this, because tech's valuation is mainly based on future growth. So the cash flows are far out in the future. And the higher you raise the interest rates, the more you have to discount those cash flows in the far future. And so since Bitcoin and Ethereum already are kind of like mainstream of the larger investors, they are simply going risk off. They think interest rates might be rising, so let's sell off tech and let's also sell off Bitcoin and Ethereum. But the retail investor doesn't really think like that, right? And so the retail investor is way more invested into the altcoins. And so the correlation with tech stocks is probably lower. And thus we see less of an impact. So this is total 3. The cryptocurrency market cap of all the alts, and we have come out of this sideways trading range. So things here really don't look that bullish. It's pretty hard to find something that we could call a reasonable support. This here is a potential drop of another 21% or so. When we look at Bitcoin in isolation, one could argue that maybe 30K is the next stop, right? And that's a drop of 23%. Here we've got Ethereum, and let's look at the 23 and 39-day moving average, which historically worked the best for Ethereum. So when you backtest trading according to those moving averages, when you exit the market whenever we are below the moving averages and you enter whenever we are above, then you find out the 23 and 39-day moving average historically worked the best. And also during this kind of correction, they worked really well. I went risk off here around the middle to end of November. So since then, we went down by 34%. If we look at the all-time high, we so far lost approximately 40%. So in Ethereum, the potential support is also at around 22%. So the bearish picture is pretty much the same for all of crypto. And so what should you do during this time? I currently spend my time on trying to figure out what are good yield farming opportunities that don't give exposure to the direct price risk over here, right? So where can I get reward on, for example, stablecoins? The Anchor protocol seems to be pretty good. So here we can get around 20% per annum on UST. And UST seems to be a pretty well-designed stablecoin. It can fluctuate somewhat when the market is too violent, because the whole mechanism that makes this stablecoin, the UST stablecoin, stable, it does have a cap. So the transfer between the Terra Luna token and the UST token, it's not unlimited to prevent some kind of exploitation of the protocol. But over the long term, the peg of UST to the US dollar seems to be pretty solid. So 20% return is very nice, right? And so when we are living through times like this, it doesn't have to necessarily feel bad to be in stables. 20% per annum is a really, really nice return, especially when we compare this with traditional markets, right? You don't have all the volatility risk. Traditional markets only return on average maybe 7 to 10% per annum, and you get all that volatility. So really being risk off sometimes, I think, does make a lot of sense, especially when at some point in time we might even see a spillover effect from the Bitcoins and Ethereums to the alts. It's not yet happening, but this is similar to what happened during the last crypto winter. The crypto winter here in 2018 started with Bitcoin. So Bitcoin already fell in the middle of December, and the altcoins, they waited with their collapse until the middle of January. So if we really see an institutionally induced bear market, because institutions sell off Bitcoin and Ethereum to risk off, then the spillover to alts might come with a certain delay. So the retail investors, they might get scared afterwards. But of course, nobody knows if we really will see huge drops. The lowest I expect Bitcoin to ever fall, right, when we look at the Bitcoin logarithmic regression chart, the long-term chart, is around 20K or so. So we might still fall below this lower band because we have done so in the past, right? When we look at this here during the Corona crash, we did come below this lower band for a while by around a third. So we could even go below this lower regression channel, but then at some point there will be, at least in my opinion, people again that pick up the pieces over here. And of course, if you put this in the very large context, then there will obviously also be political pressures not to let stocks drop by again like 30 or 40%. So there's a limit to how much tightening the central banks can actually do. So does it make sense to buy the dip now, to buy Bitcoin? It always depends on your time horizon, right? If you are willing to endure another potential, say 50% drop from here, then of course you could buy. You could buy several times, just simply dollar cost average, right? Buy more and more, the more we potentially might fall, because nobody knows exactly where it turns around. If your time horizon is long enough and you can buy several times, then of course buying now is not necessarily a bad idea. If you're speculating on a short-term turnaround though, I would probably wait, because in the short to medium term, crypto tends to move in waves, right? It tends to move with momentum, following moving averages, being outside of the market when the price is below those moving averages. In aggregate, in the past, was a winning strategy. And I expect this kind of cyclical nature, this kind of momentum characteristic of crypto to continue. So that's how I approach this. I personally, for the short term, I look at stablecoin platforms, at stablecoin returns. I don't think it's a bad idea to get quote unquote only 20% per annum, right? I think that's phenomenal. And having such opportunity costs when actually going risk on makes you also psychologically more risk averse to really just get into crypto when times look way more positive than they do right now. So let's just only be risk on when risk versus reward is really favorable right now, at least in the very short term. I'd be cautious, right? There are always short-term rallies, and especially when you've got very risky altcoins, these short-term rallies of like 10%, they can be 30 or 40% for a specific altcoin. But I don't think it makes sense to try to time the market in this way, because time during those periods is not on our side. So staying risk averse to a certain degree, I think does make sense. If you enjoyed this video, please give this a like. It will help the channel grow. And if you want to get daily market updates and ask questions directly in a chat, feel free to check out the bitcoinstrategy.com, where you can get the premium membership. Don't forget to subscribe, and also check out our Telegram channel that can be found at Bitcoin Strategy Channel. Simply search for that within the Telegram app. See you next time. Bye-bye.